Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard.
Welcome back to Kaiser Watch, John.
Jim, pleasure to be back on the show.
John, Verde Agritech had its 2021 results conference call today. Did we learn anything new?
Well, Jim, the call took almost 1.5 hours. The first part was by the CFO. It went over the financial results for 2021. This is something that we'd all already read in the press release and reviewed on CEDAR. But it was the Q&A part where Chris Velosa, the CEO, took over. That was the interesting part. Now, the whole presentation is available on the on a YouTube link, which you can get at the company's website. The call had 100 participants, which is the highest they've ever had since they started doing these Zoom conference call. And what I'm going to do here is go through some highlights of things that I noted down. So for those people out there who don't want to spend an hour and a half catching these little bits and pieces that always surface in a Q&A, which is basically a collection of questions submitted by the various parties that were on the call. Now, the call itself was done on-site in Minas Gerais state, where Plant 2 is being built. So part of it was we got a visual tour of the construction site and the surrounding area. You could see the Verdecci slate deposits in the distance. But one of the things that I was taken aback by was, wow, there's an awful lot of red dirt here in this picture, and there's one big concrete slab behind the CEO and the CFO when they're doing their presentation, and that's got a roof, and it's apparently for storage. But they still haven't poured all the floors for the warehouses where all the equipment is going to be installed, and they've guided that it should be ready for production in Q3 of this year, and that would be sort of July 1st at the earliest. But with it for April, we've got basically 3 months for them to pour a lot of concrete, erect the walls, bring in the machinery, bolt it down, test run it, and get it up and running. So I think what market's going to want to see in the next few months is visual evidence that the construction is now through that final accelerating phase where everything comes together, and they can start producing the 1.2 million ton capacity of the first version. And by the end of this year, they'll have, sometime in the fourth quarter, they'll have the doubling of this capacity to 2.4 million up and running. Now, one of the things that was brought up as a question was the idea of this new technology that they stated that they are going to reveal in the second quarter, and that could be next week. It could be in May or June. We don't know. But Chris did say that they have been working on this for 7 years. He did not say what it is. Another questioner floated a question that seemed to be a trick question, which alluded to something that Chris has mentioned in other interviews, that they have been working on loading the K Forte powder with microbes in order to, when you apply it to fields that have been who've had their biosphere decimated by all the salt from previous potassium chloride application, it will allow it to regenerate the biosphere and provide a lot more nutrients from the soil itself for uptake by the plants. And this is a big sort of ESG type story where not only does the K-Fort alternative potash product not harm the soil, it actually helps rehabilitate soils that have been destroyed by too much past fertilizer application. Now, maybe this is what we'll hear about in the next while, or maybe it's going to be something new and even more interesting than that. And if it's more interesting, well, that will be worth waiting for. Now, several questioners asked about, are you going to seek a listing on a bigger stock exchange than the TSX? And the answer was yes, it's a no-brainer that with the way we are going to be growing our revenues and our production, we will seek a bigger exchange. And somebody asked about, well, how about an American exchange? And the answer was yes, the New York Stock Exchange is in fact the place that we would like to list. And there were also questions about, are you going to do a split? And Chris said, no, we're not going to do that. And besides, splits really don't do anything. It just multiplies the number of shares, and you have a smaller per share profit as a result. But people seem to like the idea of a split. But he pointed out that the minimum listing price for the U.S. exchange is high, so he's quite happy to keep his capitalization at around 54 million fully diluted, and there's still no talk about doing any financing. It's all about using cash flow and loans to fund the expansion. Though when they do the 10 million ton per annum expansion, and this was announced on April 4th, on Monday, that they were now getting serious about the studies and the permitting cycles. Obviously, they've been watching what's going on. They already made a decision 3 or 4 weeks ago to double Plant 2's capacity to its 2.4 million ton per annum theoretical limit, which uses up the mining permit that they got granted earlier this year. But they already see the growth as strong enough to say we're now going to go ahead with the 10 million ton per annum, which will bring our total capacity by the first half of 2024 to 13 million tons of K Forte. You divide that by 6 to get the equivalent in KCl potash, and that's about 16% of current Brazilian potash consumption. There was a question about the price of that they're getting for their product, and of course the price varies. But Chris made an interesting observation that although Belarusian and Russian potash is still arriving in the Brazilian ports, because it takes 1 to 2 months for this stuff to get delivered, he says that nobody is giving a price for potash deliveries in the second half of this year, because it is now clear that there will be no Belarusian or Russian supply coming. The situation with the Ukraine invasion is now so complex, so advanced, so bad that it is inconceivable that everything will be back in action by the second half of this year. And so I asked the question, well, since you price your K Forte product on the basis of the delivered potassium chloride price, what are you selling your product now for delivery in the second half? And he admitted that, well, right now they're using the current price, which a Brazil CFR is $1,200 a ton, which is higher than the $900 he had suggested to me 3 or 4 weeks ago, that they decided we're going to cap it at this so that we don't get accused of price gouging if there is a disruption. But right now, the disruption is going to be so massive, so big. The prices that we're going to see for potash globally in the second half, they'll be off the scale, and they can still cap it. And whoever is buying the potash now at the $1,200 equivalent, the K Forte product, they're going to have a bargain in the second half of the year. Now, somebody also asked if, in light of drought in the past year and the higher fuel prices and the higher fertilizer prices that started rising last year, in what sort of financial shape are the Brazilian farmers to handle these escalating fertilizer and fuel input prices? And Chris Veloso's comment was that the Brazilian farm sector is in pretty good shape after several good years. But more importantly, they are very much cognizant that Ukraine will probably not plant its wheat crop this year, so there will be no wheat harvest. And it is unclear that any Russian wheat will ever make it to a port and to its destinations. And there was a Bloomberg article yesterday which went through, it was fascinating, all around the world, countries, especially ones who have to import food crops, grains and that's a lot of places in Africa and also in Asia. They are now scrambling to nail down their contracts for deliveries from alternative sources, because there's going to be a severe shortage when these two breadbaskets of the world, Ukraine and Russia, when their output is frozen and not happening, the prices of wheat and other crops is going to go through the roof. And this is, of course, going to be very beneficial for places such as Canada and the United States, who have a reasonably stable and scalable supply of natural gas to make their own nitrogen, their urea and ammonia for that portion of the fertilizer. Canada, of course, has plenty of potash, but its ability to ramp up output is very limited. It's 5 to 10 years to bring new potash supply online from those deep deposits in Saskatchewan. But the farmers are in a position to make an absolute bundle, fulfilling this shortfall that used to be covered by Russia and Ukraine. And Brazil is in a similar position, and the Brazilian farmers realize that. They know they're going to have higher fuel and fertilizer costs, but they also know they're going to be selling their crops at top prices. Now, there were some questions about the marketing strategy. One of the people asked, are you considering leveraging your distribution, your marketing, by hooking up with the blenders to have K Forte blended with the nitrogen and the phosphate products? And Chris Velosa pointed out something that I didn't really realize, and he said, no, the blenders all use granulated forms of nitrogen, phosphorus, and potassium. And the K Forte product is in a powdered form. So it is not really compatible with the blending mechanisms that the blenders use. So for now, they're going to stick with their direct sale network, which apparently has done extremely well since they started off several years and stumbled a number of times in terms of getting repeat orders and getting new orders. Now they have a split between their staff calling up farmers to get contracts nailed down and farmers calling them up, and they're getting calls for immediate delivery as well as future orders for some time in the second half. And I think what they're feeling there on the ground in terms of the demand for their product is a key impetus for them making this decision, not just to double plant 2's capacity, but to get cracking right away on the plant 3, 10 million ton per annum step up. Another question somebody asked was, what about trucking? Now, we know in North America we have some serious trucking problem. It's part of the supply chain problem that's causing goods not to arrive in warehouses and then in distribution centers. But Chris said that in Brazil, there is no such problem. There is a huge abundance of private sector trucking delivery entities, and 1,000 of them, and they subcontract the delivery of the product to the farmer through this network of truckers. So this is not going to be a problem where suddenly they have piles and piles of K Forte, but nobody to deliver it to the farmer. So that was good to hear. One of the things that was also a sign of how the perception of Verde Agritech and its K Forte has changed is that in December, they were finally able to use their receivables as collateral for loans, whereas before they had to sell them at a discount in order to raise working capital and secure loans. So this is a big change in the perception of where this company is going and how reliable it is going to be to pay off any loans that it's going to make along the way. There was also questions about when will this pre-feasibility study be ready, and Chris was he hedged on that. He wouldn't really say. I have a suspicion it might be before the third quarter or early the third quarter. He says there's a lot of moving parts in it, but one of the things he did point out that the step up to 50 million tons per annum, that's from double to 25 million tons per annum that was in the 2017 PFS, it will not have a base case price that's anywhere near current levels, like $1,200 a ton, but it will also be higher than the $250 per ton landed price that they used in the 2017 PFS, which at the time translated into an average $346 per ton port to farm delivered price, and that's really the benchmark that they use to price the K4 after adjusting for the volume and the extra volume, 6 times volume and whatever distance to the market. So it's going to be really interesting to see what this PFS looks like. And I asked a question too about these various technologies that they're developing. Would they be applicable to glauconite or green sand deposits elsewhere in the world? And I'm not quite sure Chris understood my question, because what we did learn is that they have put a fair bit of effort into studying all these different glauconite deposits around the world, and they invariably found that either the grade is too low or there is too much overburden or other cover over the formations to allow low-cost bulk mining that would allow using this lower grade alternative potash material as a fertilizer for the farmers. So that was interesting to learn, but when he does announce his next technology, if it does turn out to be microbe loading of the K Forte, that could be of value even with a lower grade glauconite in areas where soil rehabilitation is needed. And of course, conventional potassium chloride is not going to help in that regard. So it was a pretty good call for those who are shareholders, worth listening to try and catch all the nuances. And they did, as a marketing gimmick, provide a 5% discount coupon to buy super green sand, bags of super green sand from Amazon. This is really a retail product. Less than 1% of their sales are attributable to these international sales. But I call it a good marketing gimmick because investors who are thinking of owning the stock or who own it, you order yourself a bag of this green stuff from Amazon. You put most of it on your garden bed and sort of watch and see if it makes any difference. But you keep a jar of it on your bookshelf to remind you why you have a stake in this stock, which the way things are shaping up with this Russia-Ukraine situation and the severe shortages of both fertilizer material and farm goods that this is going to cause. This stock, I think, it's becoming more and more plausible that it'll be a $50 to $100 stock by the end of this year.
John, why is Inomin Mines down after trading up a storm last week?
Well, Inomin went down on Friday, presumably because people had listened to our Thursday show on Kaiser Watch, where I talked about how the way they presented their beaver results seems to be misleading the public into thinking that this news is a lot more than it actually is. The entire news release was factually correct, but it was the way it was presented, pushing all the hot buttons in the whole sort of clean energy and critical metals narrative or discourse. And the way the stock erupted, based on the data provided, anybody who understood the data would have just shrugged their shoulder and said, boring. And yet there was an explosion of market activity earlier in the week, as if somebody had been primed to light a fire when this news release came out. So on Monday, the company decided to set the record straight by rebutting what they call false and misleading statements that I made, and the stock has since tanked further. And I'll explain why. They say, I implied that the company used the wrong analytical technique for the samples and off the cuff stated what the grade should actually be. In fact, I did not do that. I had read the fine print and saw, they have used an analytical technique that ignores the nickel that's tied up in the lattice, and which is often shows up in deposits such as the Turnagain deposit of Giga Metals, and you end up with a 0.2+% grade, but half of it is attributable to refractory nickel that's simply not recoverable except at an extraordinary cost per ton. So this actually meant the beaver assays were better than you usually see when you see these fire assays that include the nickel that's tied up in the olivine. So they clearly weren't listening too carefully what I was saying, but I was pointing out that, for example, deposits like FPX Nickels Dakar, if you use a fire assay technique, you'll get a 0.21% nickel grade, whereas if you use a Davis tube recovery technique, which only measures the Awaruite natural stainless steel nickel content, and then you get down to like 0.15%. So that false and misleading remark wasn't that at all. It's their understanding that was false. Then they complained that I said the company presented assay results in parts per million instead of percentage to confuse investors. Well, they insist that it is normal to, it is standard reporting practice to provide these values in ppm. And really ppm, you take that number and divide it by a million and you get your percentage in decimal form, and you multiply by 100 and you've got your familiar percent figures. But the CEO, John Gomez, has probably only read news releases put out by his own company, whereas I've read thousands of news releases, and it is convention to report base metal grades, nickel, copper, all that, in percentage terms, not in ppms. The only time I see that is when a company is just trying to signal the anomalous presence of metals that aren't really the primary target metal. So that's, I think, to provide the table with the nickel grades in ppm. I'm not sure what the rationale is from deviating from the way every other junior has always presented their nickel results, be they good or bad. Then they said that I inferred that magnesium cannot be extracted from ultramafic rocks containing the mineral serpentine. And then they allude to Quebec-based Alliance Magnesium and Marubeni Metals who are planning the mining, you hear that word, mining, and processing of serpentine ore as an environmentally friendly source of magnesium at their Danville metallurgical site. The magnesium plant currently under construction will process 100 million tons of serpentine rock, the raw material that AMI will use in its production. What they don't say is that what AMI is all about is a hydrometallurgical facility for taking the tailings from a former asbestos mine that runs 25% magnesium, higher than what the Beaver ultramafic rock is. And this is rock, magnesium-bearing rock that's already been ground up and is a waste product, and they are upgrading that to magnesium metal, which has gone up 400% in price, and that's merely because of the processing bottlenecks that have emerged in China during the past year or so, and this is going to be a serious problem. Making magnesium from sources like this is legitimate because China may very well implode as a reliable source of these materials, where it has achieved a dominant position in the upgrading of the basic inputs into the forms that the market uses. And then they complained that I suggested the company paid the University of British Columbia to analyze its samples to participate in the university's carbon sequestration program. And that, and they say, well, we did not pay UBC for the analysis. Well, I guess it's good to hear that an academic institution is using taxpayers' money to do an assessment of rocks supplied by a commercial operation such as a junior resource company. Okay, well, and it's interesting that they did not mention Dr. Greg Dippel's name, and simply said that it's not UBC that's being paid. So, and then they, of course, complain that I criticized their reference to magnesium, nickel, and chromium as critical minerals. And I stand with that. All these companies, you can tell a flaky company by how much emphasis they put on the whole topic of critical minerals. When you see these headlines, so-and-so congratulates the United States government agency for recognizing that there are metals that are critical, I mean, that is dumber than dumb, because the only reason these metals are being put on these critical lists is that as a result of globalization over the past 20, 30 years, and the dumping of costs into jurisdictions where the downstream victims are powerless to do anything about it, this has resulted in metals becoming relatively cheap and available for countries around the world. But all of a sudden, we're in a deglobalization cycle. We're in a potential political fragmentation cycle, where all this stuff that comes from China and parts of Africa and Russia is just not going to be available anymore. So everybody now realizes we have a critical vulnerability to importing these materials from places that are going to become unreliable as sources from it. Well, that doesn't mean that it's something special about the metals. It simply means that they will have to develop sources closer to home. And in that regard, yeah, I'm all for these critical minerals, the juniors going out there and looking at home, and for the end users to accept they're going to have to pay a higher price. Because to mine and fabricate and process these materials in these jurisdictions where there are environmental rules and health and safety regulations, it's going to cost more. Your basic cost for making the material will be much higher than it has been in the past. And so it's going to be an interesting game out there for the juniors to find a deposit with a sufficient grade and a process that works, where you can make this at a reasonable price that still leaves a margin for selling it to the end users. And the end users are going to have to suck it up and expect that metals, raw materials, are going to cost a lot more than they used to, and we better be willing to pay this and allow the producers to have a meaningful profit margin so that this will continue to be available from these jurisdictions closer to home and mined under conditions that are ESG friendly, because that's the other cycle that's growing, is the whole ESG movement. The question, how are your inputs made? Who suffered as a consequence? What rules did you do a runaround by procuring them from someplace in China? This is all at work right now, and critical minerals, that's a big theme. But to hype it up and say, we've made a critical mineral discovery, no, you haven't made a critical mineral discovery. So, after they went through their whole list of concerns about the things I got wrong, the market said, oh my gosh, we've been duped. We've been sucked in. Everything is factually correct in this news release. However, the wording, because we're not totally plugged into what all this means, we got sucked in by this market that ramped up and traded tens of millions of shares. And now this is sunk back to, this is a pretty mediocre chunk of ultramafic rock. It's got an interesting nickel grade, probably meaningless chromium and cobalt grades, but maybe it might end up being worth developing if we do end up seeing nickel in that sort of $15 to $20 per pound in the long run as part of the world's adaptation to the reality that many of these materials, especially if you add the increased demand from the clean energy transition, simply won't be available at the prices that prevailed when everything crashed after the China supercycle hit with the financial crisis in 2008.
Are there any new juniors in your bottom fish collection that are catching your attention?
The one I'd like to introduce, it's currently bottom fish spec value rated as part of my Kaiser bottom fish collection, is Tower Resources Ltd. I first flagged it at 7 cents at the end of 2020. At the time, what intrigued me was it's the Chaco project, which is located about 30 kilometers northeast of the Blackwater deposit, which New Gold sold to Artemis Gold, which is now putting it into production, expected to be in production by 2024. This area, in the Chaco area, it has an awful lot of overburden. But the company, Tower Resources, got into this play several years ago as a result of Joe Dami, who is really from the technology sector, but had made some money on the Rainy River project in Ontario, the discovery that was made with the help of gold and till sampling. He ended up kind of in charge of this company, which had spent the past decade looking at various British Columbia exploration projects. They were legitimate attempts. They went through various CEOs. And then all of a sudden, the shareholders and that were kind of left holding the bag. And so Joe Dami took over and brought Stu Averill on board. And Stu Averill runs Overburden Drilling Management, which specializes in till sampling. And he'd done a lot of contract work in the whole Blackwater exploration and development cycle from in the past decade. So that's what got him interested in this area. And they've been chasing these VMS-related polymetallic grains. They think there's a VMS system, possibly an SK Creek-style system, because they do have gold and silver credits in the grains. They've been trying to track down where this is coming from and drilling, and they've been hitting sort of narrow stuff. They started a program last year, early in the year, only got about half of it done before problems got in the way, and those did not tag into a major VMS lens. But it was while they were working on the Rabbit North project, and this thing's been around since the 1970s. Various groups have explored it. It's a copper-gold porphyry system. It's southwest of Kamloops, the New Afton mine. But it just doesn't really have, although it will produce some interesting intersections, it just hasn't hung together to create an open-pittable copper mining type situation. And Joe was trying to coax some majors into optioning it early last year, and they said, Joe, go do a proper geochemical survey over this property, then bring it back to us, and then we'll think seriously about it, because we can see all the existing data, but we really want to see that the geochemical footprint of what this is all about. And of course, so Joe goes to Stu and says, well, they want me to do this. And this is, of course, music to Stu's ears, because he's been saying, we should do a till sampling survey over this property. And so they did do this last summer. And what emerged from this was a sort of 400 meter wide train flanking the southern part of Durand Stock, which appears to be not the porphyry system in the area, but a possible driver of the porphyry systems that evolved around it. But here was this gold in till anomaly, and it was coming from an area where there wasn't any outcrop, so they had to guess where exactly it started. And they did. Just in October, November, they started a 5-hole drill program, and the first few holes were too far south. There's clearly nothing interesting explaining the till anomaly. So they went further, and then the one hole that they reported, and this is what brought the stock to life in January 11th. Before that, it was just sort of a dog slumbering below 10 cents. Classic bonefish, missing pieces, evidence of a significant discovery. And they reported a hole of 95 meters of 1.4 grams gold, and that had 19.2 meters of 4.2 gram per ton gold. And, when you see some of these sexy intervals, like, for example, in today's West Haven Gold put out a very nice intersection on the FNM zone on the Shovel Nose property. That's a low sulfidation epithermal system that will have these bonanza zones. But this was different, and the golden zone, what Stu Averill described it as, this has the classic earmarks of a mesothermal system. And this is something similar to what Endurance Gold is chasing over at its Reliance project in the Braylorn district of southwestern British Columbia. And based on the sort of width of the till anomaly train and the fourth hole, which had just nicked the edge of this zone of disseminated pyrite, you can't really tell the gold in it. They sort of triangulated this. This thing seems to have a northeastern strike, and I've done some numbers based on the sort of guesses of the true width. If you have a zone that's 300 meters long, 20 meters thick, and as a mesothermal system goes down deep, 1,000 meters, at a 2.6 specific gravity, you get something like 15 million tons. And then, of course, you got to figure out what the grade is. Well, if you manage to have a block of rock like that runs 4 gram per ton gold, that's a 2 million ounce potential resource with a $200 plus per ton rock value. So this is a very interesting target. They have only one assayed intersection into it. That's not enough to really know what the direction and geometry of the structure is. But a couple of weeks ago, they started a 6-hole program designed to test this, and they're about halfway through. And from the sounds of it, the stock has been trading up. It's around 22, 24 cents. About a month ago, they put out a press release saying releasing the other 2 holes because the one that Stu knew was going to be good, he had got it rush assayed, pulled all his favor bank and managed to get this hole that was submitted before Christmas. They had it available for release within 3 weeks, which is unheard of at this time when, it takes 2 to 3 months to get assay turnaround. And so he got this hole. They got the other holes in March. Market didn't quite understand that these other holes weren't supposed to do anything, so the stock went down, and KRO members had an opportunity to accumulate some more when it was down there at 11, 12 cents, and the stock being whaled by people who didn't quite understand the story. But now the story's on track. This program is designed to help them sort out the geometry and set the stage for delineation drilling. Assays, of course, are required to confirm that the grade wasn't just a localized freak, though with the width of and consistency of the gold and till anomaly, it's a pretty good guess that this structure will be mineralized along those 300 meters. We just don't know the grade and thickness. We'll know the assays in 2 months. Right around now, there were about 26 million warrants that were at 22 cents. They all seem to have expired. Very few got exercised because the stock's right on the boundary of the exercise price. So the company's still going to have to raise money, but at least they only have now 150 million shares fully diluted. So this is a discovery exploration type play. They're rethinking a system that never quite made it as a copper porphyry system. They've got a new style of mineralization that they're chasing. And once they get a hang of what this is all about, then it opens up the potential to reassess the entire property for more of this style of mineralization. So this is the bottom fish I'm introducing this week for the followers of Kaiser Watch.
John, thank you so much for the update.
You're welcome, Jim.
We've been speaking with John Kaiser. I'm Jim Goddard.
Comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at kaiserresearch.com.